Hello and welcome to Moneyview. My name is Kalyan Subramani and I'm here today to simplify the Union Budget 2025. In the next few minutes, I am going to try and explain to you or simplify what are the key components in the budget, including taxes, TDS and other important items in the budget. But let's first look at the big picture. What is the Union Budget and why is it important for all of us? The Union Budget is the annual presentation made by the government on where the money is coming from and where the money is being spent over the next 1 year. While many of us are looking at the Union Budget purely from the income tax point of view, the budget also has other important components. For example, it will also tell you about what are the new duties coming into play or duties removed, which will decide the cost of the products we buy. For example, mobile phones or TVs or cars and scooters or whatever we buy, whether they're imported or whether locally made. These are the big impacts that happens on our everyday life. And another important aspect of the Union Budget is we keep talking about taxpayers' money. When we say taxpayers' money, the normal idea that comes to our head is income tax. But actually, when we say taxpayers' money, it covers the entire country because everybody pays tax in some form or other. For example, a chaiwala near your house also pays GST, which makes him a taxpayer. His money is also spent by the government. Okay, let's look at where the rupee is coming from and where it's being spent. Now, where is the rupee coming from? Income tax, 22%. Borrowings and other liabilities, 24%. What are these? These are basically what the government piles up as debt. It could be market borrowings, like for example, they may issue bonds or they may go to multilateral agencies and borrow money directly from them. And the third part is non-tax receipts. Non-tax receipts are basically income coming into the government's coffers based on some of the assets they may hold. Like for example, they may hold a large chunk of a state bank or a state-owned bank. When they issue a dividend at the end of the year, it goes to the government as an income. That is called non-tax receipt. The third is the non-debt capital receipts. These are basically capital receipts which the government gets by selling assets which it owns. For example, few years back the government sold Air India. That would be classified as non-debt capital receipt. Then comes your customs duty, which is about 4%, and then corporation tax, 17%. Corporation tax is what any business pays as tax at the end of the year. And then the GST, 18%, and finally 5% central excise duties. Now let's look at where the money is being spent. There are 9 broad categories in which the money is being spent. It includes a pension, interest payments on borrowings, central sector schemes, centrally sponsored schemes like Ayushman Bharat or Manrega, things like that. Then subsidies, which includes fertilizer subsidy or electric power subsidy that the government gives out, defense, which is about 8% now, state share of taxes and duties, then finance commission, and then finally other expenses, which is a small 8%. Now let's look at what we believe are some of the most important items in this budget, which will help us understand which direction the government is headed and what its intents are. The revised capital expenditure infrastructure is about 10.18 lakh crores now. The government is also setting up a fund of funds for startups for about 10,000 crores. For startups, the government is also extending the tax holiday, that is the years when they don't have to pay taxes, income tax, from 3 to 5 years. One of the big push the government has given in this budget, as it has done in the past budget, is in the clean energy sector. One of the untapped areas of clean energy transition was nuclear. This budget has corrected that. The government has committed to spend 20,000 crores on research on small modular reactors for nuclear energy. What this means is that by 2047, the amount of nuclear energy we produce is going to increase to 100 gigawatts. What this will further also help is in achieving the 500 gigawatt target of clean energy by 2030, in which nuclear energy will also contribute to some extent at least. Education also got a big push in this budget with a proposal to set up a Center of Excellence in AI for Education with an investment of 500 crores, and the government has also promised to add 6,500 more IIT seats and another 10,000 more medical seats in the next fiscal. The government is also going to increase the number of capital goods exempt from basic customs duty that will be used for manufacturing batteries for electric vehicles and mobile phones. This is a very important move. If this works out well, India could ultimately emerge as a major global hub for electric vehicles and mobile phones. The UDAN Regional Connectivity Scheme, which is intended to include more and more common folks to be able to fly, is now going to be expanded to include 120 new destinations. Along with this, a new greenfield airport is also coming up in Bihar. Apart from this, 50 more major tourist destinations will be developed in cooperation with the states. Medium, small and micro enterprise or MSME as is generally known are the backbone of any economy, particularly for a country like India, where they contribute up to 35% of our manufacturing and 45% of our exports. In this budget, the finance minister has revised the definition of what an MSME is, thereby opening up the possibility for including more and more companies to benefit from the access to finance. Apart from this, the credit guarantee cover for MSMEs has been increased from 10 crores to 20 crores. The government is also planning to issue customized credit cards of rupees 5 lakhs for micro MSMEs and also offer UPI link card for small vendors with a limit of rupees 30,000. In its effort to improve the tax compliance, the government has come with 3 proposals. But the subtext in this is also that the government is reaching out to taxpayers, telling them that the government trusts them to do their part in paying the tax. The first one in this is the number of years, that is extension year given to file your income tax returns, will increase from 2 to 4 years. The threshold limit for not deducting tax at source for interest income earned by senior citizens has been increased from 50,000 rupees to rupees 1 lakh. Similarly, the threshold limit for TDS on rent income, this is for everybody, not just senior citizens, has been increased from 2.4 lakhs to 6 lakhs. It is very important to understand that these efforts are not tax rebates or some exemption. It just means that tax will not be deducted at source, but the assessee will have to pay it themselves when they file their annual returns. One of the most talked about items in this budget is the revision in the income tax slabs. There is no change in the old tax regime, slabs under the old tax regime that is, but under the new tax regime, the minimum taxable income has been increased from rupees 7 lakhs to rupees 12 lakhs. So effectively, people who are earning 12.75 lakhs total income in a year, including the standard deduction of rupees 75,000, are not obliged to pay any income tax. Let's look at what the tax burden will be under the revised slab. Up to rupees 4 lakhs, no tax. 4 to 8 lakhs, 5%. 8 to 12 lakhs is 12%. 12 to 16 lakhs, 15%. 16 to 20 lakhs is 20%. 20 lakhs to 24 lakhs is 25%. And above 24 lakhs, it will be 30%. Now let's take the example of someone who is earning rupees 15 lakh a year. From a total of rupees 15 lakhs, you get a standard deduction of rupees 75,000. Your taxable income becomes 14.25 lakhs. The first 4 lakhs is taxed at 0%, which leaves us with 10.25 lakhs. The next 4 lakhs, that is 4 to 8, will be taxed at 5%. 5% of 4 lakhs is 20,000, which will leave us with 6.25 lakhs. The next 4 lakhs, that is 8 to 12 bracket, will be taxed at 10%, and that will be 40,000. The final 2.25 lakhs will be taxed 15%, which will be 33,750. The total income tax to be paid by this individual, who we presume to be earning 15 lakhs, will be 93,750. The effective rate of tax, this 93,750 as a percentage of 15 lakhs, is 6.25%. All the budget provisions that we discussed so far are applicable for the next financial year, which starts on the 1st of April 2025 and ends on 31st of March 2026. These are the key highlights of Budget 2025. If you have any more questions, let us know in the comments. Thank you for watching.